Hello, everybody. I'm your host, Eric Byrne, here at StopStrugglingNow.com. And tonight, we're talking about the housing industry, the housing market, the soaring rates from the Federal Reserve and interest rates, which causes your mortgage interest rates to go higher. There's records being drawn here. If you're thinking about buying or selling, you need to watch this video because either way you go, demand is low because of mortgage rates and also a record number low of even homes for sale. What does this mean? Well, let's talk about it. Come along, make comments down below, and welcome. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. And once again, I want to thank you so much for being here. And please share the videos because you never know who's looking for information or who's not looking for information but needs the information. Now, let's get into the Stop Struggling Now YouTube channel page and podcast page. This is so you know there are members of the channel, not only subscribers, but as you can see over here on the right hand side, they show a few members of the channel, which I greatly appreciate because as a member of the channel on the community tab, you receive special messages just for you. You receive 1 or 2 videos per month specifically for you. You can join me on any live stream because you have the link to join me on screen. And on Wednesday night lives, only members with the icons can be in the chat room. Everybody can watch. Our live streams are Monday, Wednesday, and Friday nights, and then sometimes we have special live streams, like the upcoming live stream that's going to be in about a week when we're going to be talking about Larimar City and Resort with new updates. Oh yes, ladies and gentlemen, there's new updates coming, so therefore, if you're not getting in, meaning buying a property, then you're going to be missing out on appreciation without you doing nothing, especially on a project that has no price increases built in on their contract. So whatever you're buying it at, the low prices, because we're still in phase 1, that's what your price is going to be when this thing is built in 2025, the first phase that is. And wait till you see some of the new items that's going to be added and new information. I have some of that info. Now, without further ado, let's get into this information. First of all, look at it this way. You would think where are home prices going? Well, we try to say they may drop. One of the reasons they could drop, you would think maybe there's going to be a high foreclosure rate. Well, it's not really that high. It's not like there's hundreds of thousands of homes that are in foreclosure or foreclosure filings. Yes, as you can see, up 2% from the previous quarter, up 8% from a year ago, but it's not up 25% or even 50% from a year ago. So the foreclosures aren't moving that fast. Now, some people would say, Eric, you know that's been manipulated because they were helping out borrowers by the COVID scenario by saying, you know, we're not going to do foreclosures. I realize that, but you would think after COVID has went down, you would have thought foreclosures when it went up. 97,000 foreclosures is not going to put a dent on availability when you have 50 states. All right, let's just get that clear. When you have 200 million people potentially out here, and maybe out of that you have even 10 million people, 5 million, 10 million people looking for homes, that's a small dent in the bucket. So how come home prices haven't dropped yet? I don't know, ladies and gentlemen, but I think this has something to do with it right here. This could be the number one culprit. Mortgage demand for home buyers drops to a 28-year low. as interest rates soar. This is based on August 2023 data. August 23rd, 2023 data. And this is very unique. 28-year low as interest rates soar is mortgage demand. That means people aren't being silly. They're not going out here saying, you know what, I want to sign into the 7.3, 7.5, 8% mortgage rate. I think I'll stand pat or I'm going to go rent. So again, if there's demand for home buyers for mortgages are low, doesn't that mean that there could be a low supply? But what would have happened if there was high demand? This is a trigger point for the Federal Reserve and the government. They know if they start reducing the interest rates, mortgage demand would go up. You also know what would happen as a correlation to this. That means more people will be looking to buy homes. And we're going to get in on the other side of this coin as well just shortly here. But first, I wanted to point this out because these are the keys from CNBC. I'm going to have a link to this article down below in the description box. Last week, the average contract interest rate for 30-year fixed mortgages with conforming loan balances, $726,000 or less, increased to 7.31. Man, that's like if you bought a house at $700,000 and you have a note of 7%, you're paying $6,000 a month just for your house note. My goodness, that's a lot. Just giving you guys an idea, right? That's pretty crazy. Anyhow, applications for mortgage to purchase a home dropped 5% for the week. 30% lower for the same week 1 year ago. Again, this goes along with this 28-year low for mortgage demand. This all goes hand in hand. The adjustable rate mortgage share of applications increased to 7.6. The reason why that increased is because some people are thinking, well, they may increase the interest rate this month, but they're not going to do it anymore. Because I think, you guys have heard me talk about this before, they're going to reduce the interest rate later this year. I think December. Some people are saying January. But either way, it's going to be in the next 4 to 5 months. And therefore, if you have an adjustable rate, it'll start coming down. Now, if somebody's going to sign off on these adjustable rate mortgages, you better find out what your low end is. Because maybe it only goes from 7.1 to 3 points down to 4.5. And then you'll find yourself having to refi or check out your refi options on that loan to see if there's a penalty for doing a refi early within 5 years, let's say. All right. But those are the things, because that's cost out of your pocket. If you don't have it locked in where there's zero fees, then that is some of the consideration, because the mortgage rates will drop lower once they started reducing the interest rate. So 2025 interest could be under 4%. They could be 3.5. But that would mean there's a boom in the stock market and a boom in the housing market. All right, ladies and gentlemen, let's go to the last nail in the coffin to close this one out. Home sales fall again in July as supply drops to near quarter-century low. So you know, look at that. You saw the mortgage dropped, right? Mortgage demand dropped to a 28-year low as interest soars. And because of that, home sales fall again. The sales, the number of homes sold, that makes sense because supply drops to near quarter-century low. It's a perfect storm for those holding assets such as housing, real estate investment trust, if that's what you invest in, ETFs that invest in the housing market. These are all going to have a boom when they reduced it, because if you have two things going, low supply, low demand, and you want low supply, high demand, you know what that means, ladies and gentlemen. That's a winner. Let me put myself on screen for this. A winner, because you understand supply and demand. That's the easiest thing for capitalism. So therefore, when they start reducing the interest rates and you have a high demand, I can't say it enough. This is where the boom of all booms in the housing market is going to occur. You are going to have to hold some asset, such as real estate, in your portfolio ASAP if you don't already have some movement in that direction. because do not get left out on the free equity. That free equity, if you don't know anything by now, you can borrow that free equity and use it to make yourself more money, because some people will never earn two, three, $400,000 in a matter of 1 to 2 years. Clear. Well, a home can do that for you in this day and age, and they're going to make sure it happens, ladies and gentlemen. That's the funniest thing about it. So let's get back to this, and we're going to end it here shortly. But look at this. The median price of a home sold in July was 406, an increase of 1.9% from July of last year. Price is going up still because there's low demand. Like I said, can you imagine what's going to happen? Oh my goodness, when there's a reduction in interest rates and all of a sudden there's a lot of buyers back and people are willing to overpay for homes. Oh, it's going to be glorious for all of us who are holding real estate. Sales fell month to month in all regions except the West, where they gained 2.7%. Isn't this crazy? There were 1.1 million homes for sale at the end of July, 14.6 fewer than July 2022, and about half of the pre-COVID supply. That tells you right there, 2 million to 3 million homes are generally on the market for sale any given year, as high as over 4 million in some years. So this 1.1 is absolutely ridiculous, as they say, quarter century low. That is incredible. So, you know what you need to do. We've been talking about it here. Don't be shy. Buy a home. 2023 was the mantra. It's still not too late, but it's not yet time to buy either. There's going to be a sweet spot this time, but you might want to lock in some sort of price, whether it's going to be with land, whether it's going to be with a home, townhome, condo, but you need to lock in prices now and buy something. It does not have to be in the United States. It can be in some of the United States friendly nations that they do banking and business with. That would be a good idea as well. So therefore, you will win when these interest rates come down, because once they do it, other nations will start reducing theirs, and you'll be positioning yourself perfectly. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here, but please make comments down below on what you think's going to happen over the next 6 to 8 months. I would love to hear about it. Have you been doing your research? Let me know what you think about my comments as well. Any feedback would be greatly appreciated. And with all that said, keep your head up, keep moving, and I'm out.